Good afternoon. You're with the FNO show. This is ET Now, and in consolidation mode after making that dash at 5,800, barring of course that technical aberration that you saw on account of the NSE cash segment being frozen for a few odd minutes, the Nifty has been in sort of a downtrend today, 57.38. The only disappointing fact is that we were not just circling around the 5,800 mark on the downside, of course, but now we've cracked below that 57.50 mark as well. However, lots of individual gainers in trade, so let's just quickly highlight them for you. First, on the Nifty 50 names, you've got a whole host of stocks which are actually holding out. You've got a Tata Motors, Unilever, Mahindra & Mahindra, L&T as well as seeing some traction build up for itself. A good 7.5% or rather 0.7% move coming in that one. On the flip side, there's a whole lot of red as well on the screen. So you've got an HDFC, which on account of the block deal, the Carlyle stake sale, the stock is down about 4.5%. JP Associates, Lupin is seeing some profit taking today. You've got IDFC as well, Reliance Infrastructure, Bharti, Wipro as well as BHEL after a 6.5% notch up yesterday. Today the stock is taking a beautiful breather. To the futures and options side then, and while we are latching on to a 28-point premium, the Nifty futures as well have softened from where they left off in trade yesterday, and the Bank Nifty as well is under pressure. Remember, after a 200-point notch up and a 2% gain coming in yesterday, today the Bank Nifty is down in about triple digits or so. The gainers today, they include the likes of Dabur, Optus Circuit, Tata Motors DVR, Crompton is holding up by about 2.6%, and the top notcher indeed is Adani Enterprises with a near about 4.5% notch up. On the flip side, there's weakness, like I said, for HDFC. Amongst the mid-cap universe, you've got IVRCL Infrastructure, which is currently down by about 7%, Aurobindo, Sri Renika Sugars, and Central Bank as well are the laggards in trade. Quickly then, let's bring in our experts on board and tell you how to trade the market as well as individual stocks. We've got with us CK Narayan as always, Sandeep Bagle would be with us in just minutes from now, and Vishal Kshatriya, Senior Derivative and Technical Analyst at Edelweiss as well, is on board. CK, hi, good afternoon. First, start off by your thoughts on how trade has been after that dash at 5,800 yesterday.
Yeah, I think the more significant impact has been what happened today morning rather than this push upward to 5,800. I think that was something nice. We were all feeling nice and happy about what the index was doing, but then I think the sense of confidence and indeed maybe a sense of complacence was certainly given a pretty rude shock today morning with the freaky trades which happened. So I think that has disturbed the momentum a bit, and people might be a little bit of a cautious mindset for today. If everything blows off smoothly, then maybe we'll all forget about this by Monday evening, but that actually remains to be seen. We'll know some more of how the sentiments are pairing out towards the end of the day. But as far as the trend is concerned, it remains largely undisturbed. What it did was offer us a chance to look to buy in at lower levels. Yesterday I had suggested somewhere any dip down to 5720, 5750 would give us a chance to re-enter. So presumably there was a chance for us to go long. So I would consider that I'm long in Nifty futures at the current level. And I would hold this with a stop loss at about 5699 on the belief that the uptrend is undisturbed. Similar situation exists with Bank Nifty. Today it is in a corrective mode, no doubt, but a 100-point dip from here, somewhere around 11,450, I would be happy to go long in the Bank Nifty. I still remain bullish despite the gyrations we saw in the morning. I think we should be seeing somewhat better times in the early part of next week.
Sandeep, what is your analysis? The Nifty technical, or rather the NSE technical glitch aside, how's trade panned out today?
Yes, Aisha, the technical glitch has caught a lot of traders on the wrong foot, and it's easier said than done to trade in this market. I would say that short-term traders or momentum traders should reduce their exposure and be on the sideline, because your stop losses would get triggered, though you may be right on the trend. The trend is still not changed according to me. A possible 30, 40, 50 point correction in the Nifty, I will be comfortable buying. Talk of 5720, 5700 on the Nifty futures. I am not comfortable before that because the stop losses may be hit. Though my view on the broader market remains bullish, I maintain that view and I still maintain the target of 59.30, 59.50 over the next few weeks or so. But the choppiness could be a problem. So in that sense, I would advise some caution, some restraint.
Vishal, what is your sense of how trade has been so far, and would you also think that trade is getting a little difficult in today's market, however the momentum is still intact?
Yeah, clearly even I have the same view what Dr. Narayan has. The overall trend is bullish, no doubt in that, and the best strategy to play for the market is going buy on a dip. So even I have the same view that if probably Nifty corrects by 50-60 points from here, maybe near 5,700 levels, that's the ideal level to go long. Besides this, if you see right from the beginning of the series, we have been continuously seeing 55, 56, 57 puts has been written aggressively. So this clearly indicates that yes, there is an overall underlying strength in the market. Simultaneously, we have been seeing a 59 call has been written very aggressively. Even today, 58 call has been written aggressively. So I guess yes, there is a bullish bias, there is a positive bias in the market with a resistance near 5900. Yes, no doubt Nifty can, after testing 5700 level, there is a very high probability that Nifty may again bounce back from there on and test 1500 levels. But I guess 1500 is a level where market should take a halt. So overall broader view for me is bullish positive bias with a resistance near 1500 levels.
CK, what according to you explains the strength that we've seen in Tata Motors, both the DVR as well as the stock today?
Well, I wouldn't really know the exact reason behind it. I'm happy that it is showing the strength. I think DVR has been showing better strength compared to Tata Motor itself. The numbers are not yet out, but then people are always trying to speculate about whether JLR will do more sales this time or they did last time, etc. So I think largely the stock, if you look at it from a longer term perspective, let's say from a weekly, monthly, quarterly kind of charts or longer term period, it has not really lost its bullishness. So it has been only stalled in the uptrend. And I think 280 level is a very wide gap which had happened post some news break. And if it were to succeed today in going past that and closing about 280, 284 levels, the uptrend status would be reinstated in the short term as well, and then it would be again, everybody chasing this stock would begin probably again. So I would say from a longer term perspective or a larger term player should continue to remain bullishly biased. Short term players need to be a bit on the watch because we are at the brink. It's a make or break stage for the short term, and for all the others, they should preferably be a breakout trader in this, because about 280 things should become better.
Still hovering around the 5750 odd mark, a Nifty spot. The futures holding around a good amount of premium. 5765 is where the Nifty futures are. Lots of stock specific activity, but more so concentrated today towards the broader markets, barring I think and on HDFC, which on account of the block deal is a clear laggard, currently lower by about 4.5%. Still in conversation with our three experts on board, Vishal Kshatriya, CK Narayan as well as Sandeep Wagle. And it's that time on the show when we get to stock-specific ideas. Of course, standard disclaimer before we begin to get on calls on board, to consult your financial advisor before taking any position in the futures and options market. CK, let's start off with you on your earlier calls then.
Well, out of the pending longs, Kotak Bank and Sun Pharma both triggered their stop with the gyration of the morning. So those are two trades which are out. We are still left with Reliance Power and Opto Circuit, which were the other set of pending trades. So I would recommend holding on to both of them because I see continued potential of what we had discussed earlier.
Sandeep, how about your earlier calls?
We had a short in Jindal Steel, which is in the money by a rupee or two, but it is more moving sideways. So I would recommend an exit at probably a profit of some 1,000 rupees per lot. We had a long call in GMR Infra as well as GAIL. Both have been stopped out in the morning wild movement, and we have had a 4,000 rupees per lot in each of the calls.
Okay, let's start getting you fresh ideas then. Vishal, let's start off with you. What is it that you've identified for trade for our viewers?
I have on an index front, I'm recommending a short strangle. So what I'm saying is traders need to go short 5500 put and simultaneously go short on 1500 call. So the overall net spread, there's a net inflow by doing this strategy would be 50 rupees. The stop loss for the trade would be around 80 rupees. So 30 rupees one should keep a stop loss and keep holding the strategy till the expiry. So this was on a index front. On a stock specific front, I have a long call on Tata Steel. So what I'm recommending is traders need to go long 420 strike call, October series call at a current market price which is trading near 8 to 9 rupees. My target for this call is 20 rupees, maintaining stop loss at 4. Beside this, my other call is bull call spread on Reliance Capital. So overall stock has seen a good rally. Open interest in the stock also indicates that there is a bullishness in the counter, but there is various news flow which is coming. Obviously the news flow which came into yesterday was quite positive. I would rather play with a strategy which will limit my loss in case of downside. So I'm recommending bull call spread in the stock. So traders can go long 460 strike call and simultaneously go short 480 strike call. Currently the spread for this bull call spread is around 8 rupees. So maximum loss would be 8 rupees and expecting this spread to increase by 12 to 15 rupees in days to come. The break even for this trade would be around 468 rupees.
Okay, CK, what about your fresh ideas then?
Sun TV is something that I want to go long in, currently at about 359, 360, keeping a stop at about 355. I think a target at about 370, 372 seems definitely achievable, and so risk to reward is attractive. For the second one, yesterday I had suggested buying Titan during a pullback. During the morning gyrations, it hit down to about 262, 263, and I had suggested buying somewhere around 265. I think, it traded around that for quite a while, so it should have been buyable at about 265. It continues to remain a good buy. So 265 Titan is something that I would sort of reiterate, because I think that stock is looking pretty bullish for a target of about 280. Keep a stop loss of about 5 to 6 rupees from your entry price.
Sandeep, how about your picks?
A buy in Tata Motors October futures, but I would want to buy it only above 282, currently trading at 280. Once it breaks 282, it will show that it is strong, and I would keep a stop loss of 278, play for a target of 290, a risk of 4,000 and a reward of 8,000 over the next 2 to 3 trading sessions. The second is a sell in Wipro October futures, 377 to 378, currently trading somewhere around that, in between that. Stop loss of 382.30 and a target of 364, a risk of 2650 and a reward of 6500 per lot.
Okay, just want to revisit some of the pockets which have been holding out in the last couple of trading sessions. And CK, would be a good time to revisit the cement pack. How would you go about trading names like an Ambuja or, for that matter, Ultratech now?
See, Ultratech, we had it renamed, right? We made it Ultra Trend Cement. I think it's still living up to that name. 2,000 rupees on the ticker, and still no signs of any weakness. If you look at it from a technical parameters, there is no sign of weakness. Everything is going to a new high. So people might just look at the levels and want to book some profits, but clearly that's not doing, creating any dent in the prices. So even at this level, all those profit booking sales are being absorbed. So I think more to come in Ultratech. So let's continue to hold on to it. Ambuja similarly placed, but sort of subject to a little more movement as compared to Ultra, where it is very, very clearly bullish. So I would say between the two, go for Ultratech.
Okay, and there is some news coming out in Kingfisher Airlines meantime, and I think there is an SBI comment coming in that they provided for 100% provision for Kingfisher Airlines. Would be interesting to see how the financials work out, considering this would entail a much higher provisioning for SBI. I don't know when the adjustment is going to be made, but can we just bring up that flash yet again? Of course, there are some government sources entailing that they are going to give out a detailed information on spectrum sharing in about 2 months. We'll come to that in just a bit, but SBI has provided it for 100% of KFA loan. So let's bring up both those stock prices for you. While SBI, of course, is currently lower by about 1% after the run-up that we saw in the banking pack yesterday. Kingfisher Airlines, which has been locked in lower circuit for the last 2 trading sessions, and things really don't seem to be improving for that one, down about 5% in trade today as well, just about latching on to that 13-odd level in trade. Meantime, some government sources indicating that they are going to give a detailed account of spectrum sharing in about 2 months or so, and the Supreme Court has ordered a stay on Goa iron ore mining. So let's just bring up the sensitive stocks pertaining to this news, and Sesa Goa is the one which should come up for you on your screens next. The Supreme Court has now ordered a stay on Goa iron ore mining, so things aren't really improving for Sesa Goa any longer. Sesa Goa is the stock which should come up for you on your screens next. CK, just want your thoughts on SBI as well as the PSU lot. While we've seen what the Bank Nifty did yesterday, today it's in consolidation mode. But what are this PSU banking charts actually indicating? Is there strength to come, or is there weakness in store for them?
Most certainly no weakness. There is a lot of strength. That strength has been built up through the last, let's say, month. And I think the very fact that it's holding on to the high levels and seeking to build on it is indicative of further strength which is building in. And it's a Friday and there's been big profits and there's some sort of tumult in the market. So it's not unnatural that some of the weaker holders or more nervous players are actually seeking to take some money off the table. But I don't think that is really going to affect State Bank. It's at about 2300. We did see that freaky trade down to 2100 and all that. But prices are back to where they are. It's okay. It's down by 1%, but in a week where it has sort of gathered so much of additional gains, this is not really surprising. I would think it would be business back to usual, starting Monday.
Okay, CK, Vishal as well as Sandeep, good to have you guys in the show as always. Leave the market just about okay. We're hovering around that 57.38 mark currently on Nifty. Spot still down about 50 points or so.
Let's talk about commodities now, where we have seen some bit of an uptick coming in after that choppiness that we have seen into the markets yesterday. So you have the crude prices, which are back again at $90 per barrel. The gold and silver prices, of course, have been holding on the higher side. And you also have seen the base metal prices trying to hold steady. Markets, of course, are watching out for the U.S. non-farm payroll data today in the evening. But before we get into the strategies, the big thing that happened for the commodity markets yesterday in the evening was the FCRA bill being passed by the cabinet. The bill, of course, will go in the parliament now to get a final approval, and that is when it would be implemented. But, of course, it's a day of euphoria continuing for the commodity markets here. Let's then get KV Thomas, Food Minister, joining us live on the show for his views on what he feels about the bill. Mr. Thomas, hi, welcome to the show. What's your sense now? The FCRA being cleared by the cabinet, how have you read it into the markets?
FCRA amendment will give more teeth to the FMC, and government intervention will be limited to the policy matters, and better definition on various derivatives will give a better option for both the traders and farmers and consumers to have a better examination about the future market and the future trade.
Mr. Thomas, then how do you see the markets growing? It definitely adds much more credibility coming into the commodity derivatives market in India.
Markets are getting better. If you look at the market analysis, every year the future market is going up. But coming to the amendment, this has been before the Standing Committee of Food and Public Distribution for more than 1 year, and there are representatives from almost all the parties who are in the parliament, and except a few members who belong to the CPM, everybody has supported the amendment. So I think this amendment, which has been there for a long time and debated throughout the country, once it go to the Lok Sabha for the final approval, I think it will come through.
Sure, keeping our fingers crossed for that one, Mr. Thomas. But when is the first advisory committee meeting happening, and what are the points of discussion which are on the agenda on priority right now?
See, already there is an advisory committee. I think that advisory committee will be meeting very soon. Regarding this 9-member committee of the FMC, I think once we get the minutes of the cabinet and our discussions are there, that committee will be expanded. FMC will be expanded with representation with all these stakeholders. But already we have started negotiations and discussions and getting opinions of the various stakeholders. I myself have gone to various states to discuss in many of the important decisions and discussions on the future trade.
Mr. Thomas, also as the market opens up, is there enough experience, technology and manpower, because we will be looking at new participants coming in, new volumes coming in, it really opens it up for the banks, mutual funds, FIIs, all of them?
Indian market is getting matured, they are getting better experience. Very recently, about a few days back, I was to the Idukki district of Kerala, and that is the district where the spices in the country are being produced by the spices farmers. And spices farmers have formed a society, and they are entering into the future trade, as well as the warehousing. We have got the warehousing system, registered warehouses. So they are entering into these areas. Our aim is the farmers should get a better price, and if there are vagaries of the nature, for example drought or flood, the farmers should be able to find out some solution for these vagaries of nature also, and they should definitely get a better price for the sweat they have given to produce these agricultural products.
All right, Mr. Thomas, we'll let you go at that. Thank you so much for joining us. So, of course, the cabinet bill being passed is a big yes. And as Mr. Thomas was pointing out, there is all possibility that the bill would be passed in the Parliament winter session as well. That is something the markets, of course, will be watching out for. Let's also get in then Biren Vakil. He's commodity consultant, Paradigm Commodities. Biren, hi, welcome to the show. What's your sense coming in on the commodity prices today? Because we've seen some kind of a gain up coming in for most of the base metals there. What's your sense coming in for something like a copper or a lead?
Until now, I was pretty bearish on industrial metals, energy pack. Today, I'm mild bearish. I have changed my view. Today, I will be watching on non-farm numbers. One surprising thing is Spain, Greece, and Italy equity market has shown tremendous resilience. So I think we may see a relief rally kind of thing in metals or all risky assets, because it is a risk on mode. But the real game changer, according to me, would be China leadership change, which is due in next month. So I would make up my mind somewhere in November when this change happens.
Biren, what's your sense coming in for spices then? Something like a jeera or turmeric, how would you want to trade them today?
These are where I have some little bit trades. In case of jeera, I think market is near its fair value, so I prefer to buy around 13,800. My upside objective is 14,200 and stop loss is 13,540. In case of turmeric, I see supply glut is there, and I see a little bit, I'm a little bit bearish. So here my play is to be on short side around 5,500. My downside objective is 5,300 and my stop loss would be 5,700.
All right, Biren, we'll have to let you go on that one. That's the view coming in from Paradigm. Sell call coming in for lead, gas, and in agro commodities in most of those spices as well for the market today.